Well, in what has to be absolutely peak debt insanity, I saw an article came out late yesterday that I thought was important to share with all of you. I've discussed several times on this show about the toxicity, which we know as buy now, pay later, and what it enables people to do. And you might think, well, it's a great convenience for people, but the reality is this: as I've reported before, the buy now, pay later programs offered allow you to buy something you probably can't afford to buy and pay it over 3 pay, 4 pay, whatever it is, interest free. The reality is that this debt is not reflected in the consumer debt columns. It's also not reflected on people's credit reports. So FICO scores do not reflect if somebody has failed to or defaulted on their buy now, pay later program. So, I want to discuss this because we now learn that DoorDash has teamed up with Klarna, which is one of the most prolific buy now, pay later programs. And they have decided that this as a great thing, right, for the debt-ridden consumer, that they're going to allow people to order food from DoorDash and put it on their buy now, pay later account, right? So you now can order your hamburger, you can order your Friday night pizza, you can order whatever you want, and you can basically, defer the payments on that over time, okay? I would love to have your thoughts, your input, your comments as to whether you all think this is a good idea or a bad idea. But I can say this, and I'm going to share an article with you that goes into some depth on it because it's pathetic from my perspective. And other countries around the world have got to be looking at the United States just in terms of this kind of stuff. And the shenanigans that the United States allows people to pull with regard to obtaining stuff that obviously they can't afford. And I might get comments saying, well, wait a minute, they could just use a credit card anyway. What's the difference? Here's the difference from my perspective. Again, leave your comments. The difference is this: many of these people either aren't able to get credit cards because their FICO score is so low they don't qualify to get a regular credit card. They don't have any money in the bank, so they don't have use of a debit card, or they have maxed out their credit card lines, and therefore they're unable to use their Visa card, their MasterCard, their Discover card, the Amex card for DoorDash or for Uber Eats or whatever other purposes they want. So let me jump into it. So from my perspective, that's the difference. This is another enabler, another debt enabler, okay? And this is not good stuff. And I'll share with you, if you miss payments on these things, what, the penalties that are paid, okay? So this article is out of Zero Hedge yesterday. It says, we've reported on many indications of a faltering U.S. economy being propped up by debt, but our latest entry is particularly emphatic. DoorDash has inked a deal with Klarna that will let cash-strapped consumers pay for restaurant food, groceries, and other delivery orders in 4 equal interest-free installments, or at a more convenient time, such as a date that aligns with their paycheck schedules. It says buy now, pay later BNPL arrangements have surged in recent years. However, what began as a reasonable accommodation for large purchases like appliances, okay, I'm editorializing here, like refrigerators, washers, dryers, big ticket items, right, has now metastasized, right, to a point where Americans can finance Friday night pizza impulse buys. It says Klarna derives more than 60% of its revenue fees paid by merchants who offer the financing option to their customers, with those fees potentially ranging from 1.5% to 7% of the purchase price. With some merchants, it says Klarna and other BNPL facilitators, right word, facilitator, also earn interest on long-term credit plans stretching out upwards of 36 months. And stick around for the video, because at the end of the article, there were a few X posts on this that I thought were just absolutely hilarious, kind of making fun at this whole twisted, demented setup. And I'm going to read 3 of them to you. So stick around, please, if you want, and listen at the end. At least it'll end on a lighthearted note. But this is not funny. This is pathetic. And it just shows how bad we've gone down this debt spiral in this country. However, Klarna also has a chance to earn money from consumers who take the interest-free 4-pay installment plan in the form of late fees. Listen to this: up to $7 per missed payment, up to 25% of the purchase price. So let's say you buy a burger and fries and a soft drink, and you take that delivery through DoorDash, let's say $15-20, and you miss your first payment. Now you're paying, let's say, $27 for that hamburger. You miss another payment, you're paying another $7 on top of that, up to 25% of the purchase price, okay? So what happens here is, a place like DoorDash, they're not financing this. They're basically paying, they're being paid by Klarna. Klarna becomes the bank, okay? And so Klarna becomes the financing agent, similar to like you take a loan on your home, the mortgage company holds the debt, okay? It says, for financially disorganized or imminently insolvent, okay, I get back to the fact that many people don't even have credit cards, the interest-free option could prove to be a siren song that leaves their cash flow dashed against the metaphoric rocks of unexpectedly expensive burritos and Kung Pao chicken. Obviously a tongue-in-cheek, but you get the point. It says, even for these who make timely payments, the interest-free option can have a devastating effect over time by enabling consumers to commit to spending more money than they would in the absence of the appealing, let's say, interest-free enticement. Instead, it's one of the essential attractions for DoorDash and other merchants who choose to partner with the likes of Klarna. It says, according to research from RBC Capital Markets, online BNPL offerings boosted average ticket sales by 30 to 50% and increased the share of customers who ultimately made a purchase. That's according to CNN. So listen, they're buying more than they otherwise would even buy, which they shouldn't be buying in the first place on buy now, pay later. So they're adding to the price of their ticket, if you will, because they know they can spread it out over 4-pay. Because the problem is these things start having a very pervasive and very negative influence on people who can't afford it. Anish Nangal, University of Melbourne marketing professor, studies behavioral decision-making, told Washington Post. So it says Klarna, of course, Klarna is hailing this as a wonderful thing, of course. So Chief Commercial Officer of Klarna, David Sykes, says, our partnership with DoorDash, of course, it is a spin. Our partnership with DoorDash marks an important milestone in Klarna's expansion into everyday spending categories, right? So he says, by offering smarter, more flexible payment solutions for groceries, takeout, and retail assessments, we're making convenience even more accessible for millions of Americans, okay? And then the question that the article says is, we must ask, is it ever smarter to finance a sandwich? So, of course, Americans always want convenience, and these people like DoorDash, and Uber Eats, that's how they make their money. They sell convenience to a lot of people that are too lazy to go to the store, too lazy to make themselves a meal, whatever it is. I know there are exceptions. Don't hate on me. I'm not talking trash about DoorDash or Uber Eats, although I can say I've never used it one time. So that's just me. I guess I'm old school. But anyway, that's the gist of the story, and I'd love to hear your thoughts. Is this a good thing when we have people who shouldn't even be able to obtain anything, on credit at all, and probably either don't have accessibility to regular credit, like a credit card, a debit card, because their credit score is too low, or they don't have any funds, or they've maxed out what they already have. Again, I know I'm being a bit repetitive, but I laughed at this at first, and I started to realize just how sad it is. Okay. So anyway, let me read to you three of the X posts that kind of, poked fun at this whole situation. The first one is from Max Gagliardi. He says, so then they securitize all the DoorDash loans and slice them into tranches to sell off to the banks. Rating agencies were slapping AAA on Chick-fil-A orders for credit scores under 500 who didn't leave a tip. So that's the first one. Second one is from Dr. Parik Patel. He says, so we take these DoorDash loans, combine them, and create a whole new instrument where investors can bet on whether borrowers will pay off their Taco Bell Crunchwrap Supreme within the next 12 months. Thought that was a cute one. And lastly, this is from Chase Passive Income. It says, excited to announce, this is classic, excited to announce that I closed on a $31.38 transaction to secure a burrito and a side of chips. 20-year senior fixed rate financing was provided by Klarna. DoorDash provided delivery of the asset. Congratulations to all involved. And I was rolling at that one. So I hope you guys thought this was something that at least you understand is happening. I hope that you're not one of those going down this path, because it's going to obviously end up pretty badly with these people that don't understand. They don't understand money. They don't understand finances. If they did, they probably wouldn't be in the situation in the first place. Again, I know it's lighthearted in nature for a weekend here, but it is pathetic. Okay, love to hear your thoughts and comments as always. Thanks for watching. Thanks for supporting the channel, subscribing, liking, all those great things. Have a good rest of your weekend. Stay safe, stay healthy. Keep your eyes wide open, ears open. A lot going on. Let's see how the markets open up tomorrow and what else happens this week with the administration. Okay, be ready for anything. I'll talk to you all soon. Bye.